All right, so recently decided that I want to. Well, this was already planned, but I do want to create a like what's it called? A trading or strategy, like a strategy. Um, I can't believe I forgot what it's called. Um, how you trade basically. Creating one of those so I can have my strategy outlined, right? Basically, a strategy outlined. So I do want to do that. First thing I'm gonna do, I'm gonna um, mark down what I want to talk about. So first, I want to talk about conditions, right? Either are we in an uptrend? Well, are we trending, consolidating, or pulling back, or retracing? So these are the basically the three modes that price moves in, right? We retrace trend, or are we consolidating, or trending, or retracing, trending, or retracing? That's all price does, right? So these are the three conditions that price moves in. We're gonna talk about entries, right? We're entering on Fibonacci, um, liquidity sweep, entry condition, entry conditions, entry conditions, right? Fibonacci, liquidity sweep. What else? I have movement ever done here. Let me remove that. Yeah. So liquidity sweep. Are we entering on a pullback to zone where price created a higher high slash um lower low, or yeah, like let me just try to find an example. Like right here, price pulls back to the same area broke through. So it created a um what's it called? Lower low, pulls up, breaks through it, comes back to that lower low, and then continues down. That's price tends to do that a lot, right? Um, we're entering on a supply slash demand zone or support slash resistance zone. What other conditions do we have? Um, Pretty sure that's basically all of my conditions that I tend to look for. There's not much else, honestly. Um, what else? Fibonacci. I don't use trend lines. Look for liquidity sweeps. Pull back to a zone. Um, I think that's really it. We look for these five conditions, and that's really what price, or that's really what makes me enter on a trade. Um, just finished the backtesting session, so I'm doing this shortly after, and yeah, I'm pretty sure that's what makes me enter on a trade. Okay, now we also have invalidation conditions. Invalidation conditions. So basically, stop loss. Where do we put our stop loss? Right below liquidity sweep. Liquidity sweep. Check that out. Um, Below slash above liquidity sweep. Um, and under structure, under confirmed structure, right? Because let me try to find an example. We're on the 1 hour, so this isn't gonna look super clean. It's not gonna look too clean. I'll just go to 50-minute, try to see something. Um, do, 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 do. Can't really find a good example. What I'm looking for is like an area where price does this. Like price does this, boom, 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 and I enter here instead of waiting for a confirmation, a continuation confirmation. And sometimes price will just do this. If I enter here, it will just retrace right back up with not a lot of confirmation from this area. Like I'll have nothing over here confirming the entry here. Like if I have the area where say price pulled up, boom boom, and then we get this, I have this area right here to have a confirmation on if it was down here. And say I have liquidity over here, but over here in this leg, and then price sweeps it up here and then pushes down, things like that. Having confirmation in areas in that sense. Um, yeah. So yeah, under slash above confirmed structure. That's really my only two areas I'm gonna have my stop loss at. As for take profits, take profit, TP conditions. Um, well, I want to go deeper into these. So Fibonacci, 50% retracement if trending heavy, 75/25. I just want to get this off before I forget. 75%/25% when looking for deeper retracement, likely to coincide with supply/demand zone. Excuse me. Liquidity sweep equal highs/lows. What else? Stacked liquidity. What other types of liquidity is there? Stacked and trending liquidity. Those are really the only places we're gonna see. We'll get into the rest later. I just remember these two. So TP condition's gonna be at weak highs/lows. Fibonacci zone or Fibonacci -61.8. What other areas? Liquidity pools, I'll say. We do sometimes have entries where there are liquidity pools that price taps into. Trying to think. I don't think there's really much else to see price tap into as far as TPs go. Yeah. Pretty sure that's just it for that. And we're gonna talk about words of wisdom. We're gonna talk about how to battle each and every trading problem I face. I'm gonna have a list, paste list, and talk about each. Make sure it's recording. Yeah. Gonna paste the list and talk about each one. Boom. And yeah, I guess we can get started. So this is gonna be like a strategy breakdown mainly. Um, but yeah, so there's basically so for conditions as to what I'm looking for to trade, there are two ways that price mainly moves. We move in a trending fashion, right, with higher highs and higher lows, with price constantly breaking the lows, or the exact opposite. Hold on. Also for conditions, I do want to add what range are we in? Oh, entry conditions. Counter. Are we pro trend slash pro internal? This gives higher probability because we are a lot aligning with the trend, right? Um, Also conditions identify a range. So yeah, so we have that, and then we have this. Higher highs, higher lows. Sometimes we'll see price come tap back up here. Boom. Uh, Quick sweep and then a strong flush down. Price doesn't always move perfect, right? Price moves sporadically, and then there will be times where price is simply doing this. Boom, boom. Not really giving us a clear trend to move from. It'll close back down here and just keep on like consolidating until we eventually see a breakdown, and continuation, right? So these are the main three trends that price moves in. We could find real chart examples here, right? Here we see price moving up, trending up. Oh, I also forgot retracing. So every single time we see a break of structure, we should be looking for a retracement. Every single time we see a break of structure, we are not focused on it continuing. Once we see a break of structure, we're not focused on it continuing flushing down. We're focused on seeing a retracement for an entry. Right. Once we see one of our entry conditions get met, we can be aggressive and enter, but we should be waiting for a break above structure, pullback, and then the entry. That gives us the highest probability um, setup. So once we see a break of structure, pullback, re-entry, or break of structure, pullback, re-entry, break of structure, pullback, break of structure, pullback. We don't see a break of structure yet. This doesn't constitute a break of structure. This was a liquidity sweep. Break of structure, pullback, break of structure. We're gonna see a pullback, break of structure. Right, we all see this. So we scale down. What do we see? Let me remove those trading sessions. Also, let me add in the conditions. What time do we trade? 8 a.m. to 11 a.m. New York session only. Only session I'm trading. So what do we see? Illustration. See price pull. No, that's the wrong one. See price pull. That's the wrong one. Is it shift? What was it? Oh, it's this button. Okay. So we see price pull down. We scale down back. We see I'm not sure where, but probably just for here. This probably is our range from here. We see a breaker structure here. So this is our new range. Boom, boom. So we do see price break structure. Now, what are we expecting? We're expecting a pullback. And what do we know? What in every I forgot how the phrase went, but the moral of that phrase is in every trend is going to be a mini trend. So if we scale up to the 4 hour, this is going to look. Wait, every run is a trend on a lower time frame. That's what it was. So if we see this trend is going to look like a run on the lower time frame. Let's find it. So where were we? We were right here. Let's identify this real quick. Boom, boom. This is going to look like basically two candlesticks, right? Or a few. This is just a run on the 4 hour, but we scale down. Now it becomes a trend, right? Now we scale down on this. We keep scaling down. We scale down on this right here. Well, guess what? This is another trend. We scale down on what? This. Scale down even deeper. Goodness. Do I not have enough market data? Yeah, GG's. It's not even that far back. But yeah, that is also another trend. You know, the trend just keeps getting more and more. For every run, it's always a trend, right? um, yeah. So every single time we see a break of structure, we saw that break of structure, and also we always want to have our ranges marked out. It is so useful to know our range. So I'm jumping a lot, but just bear with me. So what's our range from here? Let's just start from back here. Our range is from here. Our range is the lowest point that broke structure to the highest point that broke structure. The lowest point before structure broke and the highest point that broke structure after structure broke. How do we know when the highest point is the highest point? When we see a change of character. How do we know when we see a change of character? When we scale down and see a break of structure. Alright, so see price here. This is our range. Right. We pull down, pull up, break a structure. Don't really see a decent pullback. When we don't see a pullback, we can expect a pullback soon enough. We're gonna get a pullback soon enough, right? So yeah. So this is our range. Then we see price break through there. What's the highest point that broke through that range here? Then we see price pull back up. So now this is our new range that we're trading within. Then we see price break structure. This is our new range. Then we see price pull back up, break structure, new range. Until price breaks above this area, we are still bearish, right? So as long as we're in this range, we are still bearish. As long as price doesn't break through this strong high, the strong high that was able to take out this low, compared to this weak low that wasn't able to take out this high, right? We can be confident that price can get up to this area, and if it does not break through, we are still bearish, right? So price pushes down. Yeah, we get another break of structure. Oops. Now our range is from here to what? Right here, I guess. Then we see a break of structure. Then we start consolidating, right? We don't trade this. That would be if it looked like that on the lower time frame, but we're on the hourly, so it looks like that. But yeah, so trending. This is a trend. Boom, boom. Retracement is when we see price pullback. We don't trade retracements. We trade off of a continuation off of a retracement. So we see price. What do we see right here? I'm pretty sure this is a pretty good trade, right? The setup we could see right here. Even though it's on the hourly, we see price break structure to the upside. What do we see? Price come down back into that area where price broke structure. Down here, you see price tap into that area. Could enter here, but we do see we got stopped out. Why did we get stopped out? Not too sure. Price just sweeps liquidity down here. So we see price break above, stops us out here. sweeps the liquidity and then continues up. Again, the strategy isn't foolproof. We're gonna get stopped out. Everything, all it, for everything, for every single entry condition, you can find a scenario where it doesn't work. You can always find a scenario where you see the A plus setup, but it just doesn't play out because it's market. It's the market. Like we're trading. Like we're not trading like a repeatable market. Like the market is made up of people. You feel me? So yeah. So gotta keep that in mind. So we also have ranging or consolidating or tracing. So yeah, so for entry conditions, we want to know, are we pro internal or pro um are we pro internal and pro swing? I said swing, right? I said pro trend swing. Oh no. Are we pro swing, pro internal, or pro or counter swing and pro internal, which would be riding the retracement back up, or down. Um, but yeah, so we can find examples, but we would have to live trade. Um, Let me delete these for her. Probably are going to get into some live trading to show these entry conditions, show a few examples for each entry condition and invalidation condition and TP condition. So we're probably going to get into that. But yeah, so you're just going to see a quick jump, but it'll be the next day for me because it's pretty late.
All right, so my screen's frozen. All right, here we are. So, left off, we were going to begin the live, trading, not live trading, back testing and looking at all of my entry conditions in a back test, environment to see if they really work. So I'm going to get that set up. All right, so we're all good. I'm going to have this on another screen, so know what we're looking for. Where is it? Okay, that was the wrong screen. All right. Make sure we're still recording. All right, we're good. So, have our entry conditions. Let's go into the FX replay. Going to clear everything. We already know what's happening over here. So, you left off. This is also going to be a continuation of the back testing. I might as well copy and paste everything here. So I'm gonna try and get a checklist of every single thing here. Matter of fact, I don't know. I just don't copy and paste all of it. All right, boom. So, okay, what's happening? All right, so FX replay. Here we are. Let's go to next day 8 a.m. 7:30. 7:30 right here. All right, so here we are. So, as we talked about, firstly, we want to identify what market cycle are we in? Are we trending? Are we consolidating? Or are we retracing? So we scale on the 4-hour. Obviously, we are consolidating, right? We got a strong trend up, but now we're consolidating. We're not really pulling back. Price is creating a lot of pools of liquidity, and we don't really see high probability setups in this, honestly. Mainly our liquidity zones are probably just here to here. We also want to identify our range. So let's do that. Last point that broke structure. Let's go on the 4-hour to see this. Structure really hasn't been broken. Where this is basically our range from here. Let me do a ray from here to up right here. This is really our range that we're trading within. So We see a break below, we're gonna start looking for sells. We see a break above, we're gonna start looking for buys. We are still looking for buys regardless, but on the lower time frame, what's our range? Probably just within this zone right here as well. So we see a sweep of liquidity down here. We're gonna see push up, or we could see a tap into this demand zone or supply. I mean. So yeah. So before we enter a trade, first we want to see, are we pro swing and pro internal, or counter swing, counter internal, counter swing, pro internal, um, pro swing, counter internal. We always want to trade with the trend. So our highest probability setups are going to be pro swing, pro internal, right? If we do pro swing, counter internal, that means we're trading against the trend, you know. But yeah, so let's start trading the session, and we're gonna look up for these things. Again, 8 a.m. to 11 a.m. So we do have that marked out. Let's go to the 5-minute. We're at 7:15. Okay, it's 8 o'clock now. Saw a sweep. There's just no way you enter on this after seeing that, because we do wait for closures of candlesticks. We also want to see closures of candlesticks. We don't want to just enter amidst any candlesticks. So yeah. Also have some low resistance liquidity over here. Alright, so let's see what price is planning on doing. So we're pushing down. Let's scale out real quick. We're pushing down pretty strongly. We're probably looking to seek this liquidity down here, or even tap into the zone down here. It's probably our highest probability setup. Let's see price do. So we see a closure above this range and a break of structure. And a pretty strong wick on the 15-minute. Yeah, this is our supply and demand, or support and resistance condition. So we see that. We also see a break of structure. Excuse me. But on the lower time frame, pretty minor. But let's enter for a buy here. I'm very confident on this. Just gonna keep it simple. So our invalidation is going to be where? Right below confirmed structure, where price tapped into this area and then pushed up. Where's our TP gonna be? Excuse me. Oh yeah, TP condition is also session highs / lows. Forgot to add that. So session highs or lows are going to be our TP. So really, Asian highs and London highs are really going to be our TP for this trade. Really only place where we see liquidity. We saw liquidity down here. It tapped into this zone, and now we're pushing up. So this is probably our highest probability setup. So let's enter for this. TP below, stop loss below structure down here. So let's see what price does. We see another break of structure. Again, we trust the trade. We know that if price gets to down here, then our trade is invalidated. Price can do all the dilly-dallying it wants here. As long as price stays above here, it is not invalidated. And also, I'm going to be more wary, because considering we do create equal lows here, and we do have a bunch of liquidity down here to seek, we're probably going to be seeing price reach down here really soon to seek all of this liquidity, because it is a really probable liquidity zone to see. So we'll probably get a sweep into a sweep down here is really what we want to see. We saw a break of structure, pullback. What do we see? See a Fibonacci, 50%. And also another confluence, we see price tap back into this area where price broke through. We see the higher high or lower high that got broken. And the price comes back and taps right back into that zone. So we got two of our entry conditions. We got the Fibonacci 50% retracement anywhere in this zone. We also get the pullback to a zone where price created a higher high / higher low, or higher low, higher high. You know what I mean? We're also, if we scale out, we're pro internal because we are bullish, and we are um pro swing because we are bullish, and pro internal because we are trading to the upside. So another good trade would be here. This is a pretty high probability trade. You could enter this. Lower lot size, of course. To see a confirmation with the good candle stick up, but we should be conscious that price probably isn't going to keep pushing up for too much longer. Again, another breaker structure. We're trading alongside the trend. All right, this is really nice, and then we see a breaker structure. Probably gonna see a pullback, likely back into the supply zone down here. It's not very dark, so you can't see it. Let me fucking. Make it a bit darker. There we go. Yeah. So also let's let price play out. Just letting price rock. See another breaker structure. We're just seeing breaker structures. And where does price come back? Again, this is our continuation setup, right? So liquidity sweeps are a reversal model, right? Reversal, supply and demand also is our reversal model. Support and resistance is kind of reversal and continuation, but our main reversal model is liquidity sweeps and supply and demand, which goes both ways. Because as we saw here, this was our reversal model. We saw price tap into this demand zone and then push up. That's our reversal model, right? Because we know that price is coming down to seek this area and then push up, right? We probably would have liked to see a sweep of liquidity, but that's probably for a later session to do. We know that Asian and London tend to sweep liquidity a lot and then build liquidity for New York to use, right? So we're probably going to see a sweep into a sweep, as I said. Our Fibonacci 50% is our continuation model. If we go back to the 1 minute, what do we see? We see price push up, come down, Fibonacci, push up, push down, Fibonacci, push up, push down, Fibonacci, 70.75, push up, push down, not as strong. Oh, Fibonacci again. I thought that was the 25, but yeah, price taps the Fibonacci again. Price continues to do this, and also what does price do? Comes to retrace back in the same area that it broke through. Did it there, boom, does it again here. Boom. Did it again here. And yeah, when price breaks structure, it comes back to test that, and then it'll continue breaking. So let's continue seeing what price does. We're likely seeing a seek of liquidity here. And when we enter on these, we don't really want to shoot for the moon, right? Because we understand that price can do this, like come back and seek liquidity before pushing up. So we don't want to have a crazy TP. These aren't really A+ setups. They're just continuation setups. Like I like to take trades during the beginning of the start of the trend instead of later on, See price comes down, seeks this liquidity down here. Now what does price do? Push up strongly. You could have entered right here. Another strong setup right here. And where could you have entered to? Probably you could have entered to there. Pretty low risk reward, or entered to our original TP, which eventually does get hits, and our TP is fulfilled. So we saw our entry models. We saw price coming down, and we even in a consolidating market, we were still able to trade, right? But we understand that we're not going to be reaching for liquidity all the way up here or here. We stay within our previous session, like London and Asian. We stay within those type of ranges because we know that price probably isn't going to create new highs after consolidating for days on end, We're just looking for price to get quick moves. We saw our Fibonacci setup get fulfilled. We didn't see our liquidity sweep get fulfilled. Some days it's not gonna happen. We saw price tap into that demand zone and then or supply zone and then quickly push up, showing that if price wanted to, like back here, I remember trading this where price should have swept this liquidity. If price wants to, it will sweep the liquidity, but it just happened not to sweep the liquidity yet. So what can we expect? Price probably doesn't need to yet. 1 second. All right, but yeah, we saw our Fibonacci get used. We saw that in play. We saw our liquidity sweep down here get played, right? With price reaching this area, then pulling back down to seek some liquidity for pushing up. We know that price isn't just always going to keep pushing and trending up. Sometimes we do got to sweep some liquidity. So you could have entered here, would have got stopped out, but it's all in good favor because we know that price is sweeping liquidity. And also, entering just on every single push up probably isn't the most probable thing because we do know that we do need some higher confluence setups, which is that liquidity sweep. So we did get to see the liquidity sweep happen in our reversal as our reversal pattern or our reversal confluence. We saw our stop loss here being below the liquidity sweep and under confirmed structure. We saw our TP condition, which was session highs / lows. Also liquidity pools, because we do know that there's a bunch of resting liquidity up there. Could have seen the negative 61.8 as well, because from this Fibonacci here, we saw the negative 61.8 get played and then instantly reject down. So that was also a TP you could have had. And yeah, weak highs / weak lows. We didn't really see the weak highs or lows get played here because these aren't really weak highs. But we do know that they broke structure to be able to tap into the supply zone. So this record structure isn't stronger than price tapping into the supply zone than pushing up. You know what I mean? So yeah, so let's continue. By going over here. 7. That's too far. What is 7:30 again? And what do we see price do? Good grief! What, bro? Right after we see that sweep, I didn't even. Oh, it was 10. Well, we got our trades in, so I would have stopped trading regardless. But right after we seen that sweep, what do we see on the 1 minute? Let's see. Let's scale down. We see price sweep this liquidity, push up, right? Let me see that. And then what do we see price do? Close within this range, come up, close down, break a structure. Could have entered right here. Strong confluence because we know that price is sweeping into a sweep. So where can we have our TP? Down here. What would have got smashed? Your TP, right? So that was also a very high probability trade if we kept trading there. That would have been a really good trade. But now we're on to the next. Did I miss? Oh my gosh, how did I do that? I missed a session here, but this session looks pretty choppy, honestly. We see price tap into this demand zone, supply zone, but I mean, that's really the only thing here. 50% as well. I don't understand how I missed that. But next one, we see price rally up crazy during the Asian session. That is an insane rally. Insane range we see from Asian session. So what can we expect? Honestly, we can expect some good movement from New York. They'll probably just sweep and come back down. So we're probably gonna see some reversals to the downside. Where's our resting liquidity? Honestly, it's just down here. So this is our only place of liquidity that we see. Also, this was over the weekend. So yeah, let's see price. See what price does. So I got some liquidity. So here, boom. So what's our new range? I said we. Oh no. Oh, I thought I clicked it. Okay, so we always have our range. First pulled up, came down, pulled up again. Our range is from here to here, so that's our range. So we can move this up. We kind of already know our range, but let's have it just in case. Good moment. So let's scale down. And let's go to 5 minutes, see what price is doing. 725. Let's move forward a bit. I have no words. That is just terrific. That just happened. Okay. I mean, we see a sweep of liquidity here and a push up. I'm not even gonna bother. I'm just gonna go to the next session, and hopefully that same thing does not happen. 750. Okay, next session. Price continues rallying up. We have liquidity built up. We didn't see any liquidity down here. I guess taken. So guys, structure right here, boom, and probably just right here, and a little bit more down here. So yeah, so let's, and also down here as well, and over here. Just marking these out. So let's see what price is doing. See price push up. Let's go on the 5 minute. We're consolidating right now. I mean, I'm not really seeing any movement during London, but let's see what we see happen. Probably just want to see price pull down and sweep some liquidity at least before pushing back up. Or a decent pullback, honestly. We haven't seen too great of a pullback. Besides this, we could see a deeper pullback, sweep this liquidity, and then a continuation up. That would be pretty good. Let's see what price does though. We see a break of structure to the upside. Price taps back into that area. We always see this happen. What does price continue to do? Price comes back down. Unable to break above this area. Oh, just this demand area. We just have marked out. See price pull down. See price pull back up. I'm entering for a sell here, honestly. This is counter swing, and I'd say counter internal as well. But it's not really counter internal because we are pushing down. We did break structure here. So I'm going to enter for a sell here. I'm pretty confident in this. It's not a bad setup because we do know we are pushing down to seek some liquidity after rejecting off this demand area. And yeah, I mean, okay, so we get stopped out pretty fast. We see price tap up again. Okay, so entered pretty hastily. I probably wasn't the move to enter, so we're just seeing price rally up. And we see price tap back into this area again. Now, this isn't a bad area to look for longs, especially considering we see a tap back into the 50% area. So I enter for a long here as well. Considering we haven't pushed down, I doubt we're going to see a push down now. Also, this 61.8 matches with the where we want to see liquidity get swept. But considering we haven't seen a push down, I doubt we're going to see a push down now. Considering price probably doesn't even need this liquidity to push up. We're pushing up already, so yeah. This is pro swing, pro internal, so we do have a high probability of this trade playing out. So see what happens. Okay. What time is this? 9 a.m. 9:04 a.m. does this. That is just beautiful, isn't it? What day is that? I'm all over the place. Wednesday, 21st. I don't know. Okay. So price just did that. I mean, this is pretty abnormal. And we see a strong sweep of all of this liquidity down here. We're probably going to see the push up now. I'd enter on a pullback. Or price is just going to just do this. What is happening? I don't want to enter too hastily, but I would probably enter for a buy here. But after that loss, I probably just don't want to enter. I'm not going to enter. Even though I would have entered where? Probably right here. It's all the way to up here again. We might see that trade play out, but even if we don't, like, just look at this choppiness. Like, I don't even want to be in this trade. Yeah, like, this is a horrible trade to be in. That's probably a trade I would have entered, but I'd prefer to have just stopped right there because, I mean, look at the structure. You know, it's not that clean. This was clean structure right here. Entering on here, entering where I sold would have been the most probable setup because I was seeking all this downside liquidity when price probably just doesn't need it as of right now. If price isn't pulling down yet and we're seeing price push up, we see a Fibonacci right here. Tap into the 0.75 and just buy to the negative 61.8. It's just a good trade for me, but I didn't say that happened, so yeah. Alright, so yeah, so we did see price pull down pretty strongly, but I mean, yeah, this wouldn't have been a good trade to enter at all. But this trade, I'm not too upset at. I was expecting price to continue pulling up. Pretty high probability trade right there. And here, should I enter for a buy instead of a sell here because it was counter swing, counter internal. This also is not a good setup. So we'll do one more. We'll go back and just finish up with the words of wisdom and ways to fight the issues I have. So, so we do see price pull down very strongly. Very nice pull down. Now we're seeing a pull back up. See a bearish structure right here, pull down. So we're probably gonna hopefully see a deeper pull down, probably back into this area right here, and also sweep this liquidity right here, giving us a lot of confluence to enter off of. Also, this would be a pretty strong 50%, even though it's a very large Fibonacci, very large 50%. But I will just be patient and just see what price does here. I'm not gonna enter too hastily. Okay, so I'm gonna enter here. Price, we didn't see price exactly tap right here as I wanted to, but it did push up. So it's also pushing up off of this area right here where price also broke structure right there. The Fibonacci we also got right here. Boom, boom. Gonna enter probably up to this high right here, just to give us a higher risk to reward. But this isn't a bad trade. I'm not mad at this right here. We're entering on the continuation. We saw price sweep liquidity, push up, and yeah, I'm not upset at this. I think this is a good trade. What do we have to worry about with this trade? We see our criteria being met. So price continuing to pull up. Just let price rock. and we see our TP get hit. So that was a really good trade. I'm not upset at that. Like, we saw what we wanted to see. We saw break a structure to confirm really strongly our bias. Then we see price pull up, pull down, we enter on a strong pull up, and yeah, that's just a really good trade right there. So back to the charts. Oh, it's on 30. We could continue. Do we want to continue trading? I want to see what price continues doing. I'm gonna analyze. You see price pull all the way up, pull down. So we're probably just seeing this as a pull back to give us another entry. And where does price re-pull back down to? Same area that price broke through. It's clockwork. If we would have entered here, not probably a good high probability trade. I mean right here. Like, not a bad trade. But you don't have a lot of confluence because where are you going to enter to? All the way up here? I mean, you could, but this might happen. That might happen. You feel me? So that's probably not the highest probability trade to enter off of. That's not an A+ setup. So I want to see price pull back even deeper. I'm not liking this. It was enough for price to do this. So price did this. I didn't like it. I didn't see really anything off of that. So if I don't like it, I'm not trading it. So price, we already got a good trade here. And price continues pumping. And yeah, we got ours. So let's go back to trading view, and we are going to end off with some words of wisdom that I'm going to type first, and I'm gonna paste every trading problem I have, and we're gonna talk about them and solutions. So we're gonna do problem, solution, and just words of wisdom that I would tell myself if I was beginning trading again. So yeah, I'll be back. All right, so I'm back, and hold on, this is not showing. All right, so I'm back. I ended up putting everything in a Google Doc because, yeah, you can see. But this is basically I've remembered the name. It's called the trading plan. I don't know how or why I forgot that from earlier, but yeah, this is my trading plan. So I'm gonna go over it real quick. This is literally everything. This is my bread and butter. This is every single thing that I use to trade, and we saw it with genuinely trading in the markets. I already gave examples and everything, so let's get into this. So trading conditions. First, we need to identify what market cycle we are in. Always identify what market cycle we're in. Why do we need to do that? We need to do that to know how much we can expect price to move. In a consolidating market, we don't expect price to move as much as it would in a trending market. So in consolidation market, we're still trading because we trade a very specific time zone where price does move and does give us opportunity, but we know that price isn't going to move as much as it would while trending. So there's three different market cycles: trending, consolidating, and retracing. We also need to understand what range we are in. To do that, find the lowest or highest point before breaking structure to the highest or lowest point before retracing, right? So, also with market cycles, with retracing, it's really just a pullback, right? When price is pulling back, it's retracing. We don't really trade that. We want to see price retrace into an area where we can buy or sell to, depending on where what type of trend we're in. Are we in an uptrend or a downtrend? You know, price either goes up, down, or consolidates. So before trading, understand if your bias is pro or counter swing, and pro or counter internal. We need to know, are we trading with the trend before I place this trade? Are we trading against the trend before I place this trade? Am I trading with the swing structure but against internal structure, or against swing structure but pro or for against swing structure and for internal structure? So we need to understand that to know how much confidence we can have in the trade, right? So again, we only trade 8 a.m. to 11 a.m. New York session only, strictly, just sticking to that, right? So entry conditions. So we have our reversal model and we have our continuation model. For our reversal model, we want to see a liquidity sweep either created by equal highs or lows, stacked liquidity, trending liquidity, and high and low resistance liquidity. High So the difference between high and low resistance liquidity, high resistance liquidity would be something like this, like equal highs. That would be high resistance liquidity, right? We see that get swept. Low resistance liquidity would be like trying to find a good trend. Like right here. This would be low resistance liquidity. Like right here. Boom. 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 This is low resistance liquidity. High resistance liquidity is more like equal highs and lows, as said before. So yeah, we want to see price react off of one of these areas from liquidity to get our reversal model fulfilled, because we don't want to enter in a reversal based off of Fibonacci. That's not really what we're looking for. And also another reversal model is supply and demand. We tend to see price tap into a supply or demand area and then reverse. We could find an example of that somewhere in the 30-minute. Just go on the 5 minutes, trying to find a clear example. We had clearer examples when we were backtesting, but this isn't really the best example. But here, say like right here, where price starts pushing up, a reversal model. Price is pulling down, then we see a reversal. But yeah. So while we were backtesting, we saw some better patterns that showed it better, but you don't need to see it at every single point. You see it when you see it, and you use it when you see it. So for our continuation model, for trending, we look for Fibonacci. We look for 50% retracement. If we're trending heavy, we want to see a 50%. We're not looking for retracement back into premium or discounted zone if we're trending heavy, right? But we are looking for the premium / discount if when looking for deeper retracement, right? I put 25%. I don't know why I did that. It's always gonna be the 75%. Because when price retraces, you always want to see it come down here. We're not looking for it to be here. I don't know. I thought it was that was a mistake, but it's always the 75%. That's my fault. But yeah. And it's also likely to coincide with a supply and demand zone. So let's see. You might see price do this. Boom. Boom, boom, boom. And then create a little candle, boom. And then so like this. So we see price pull up, then we get a supply area off of this, right? Like right here. Now we see price tap back into that. We also get Fibonacci. Tap back into the 75% zone, and then we see price pull down, right? This is a high probability setup right there. A pullback to zone where price broke a higher high or higher lower low. We've been seeing that when price breaks structure, it typically comes back to where it broke that structure at, right? This again is a confluence. We're not trading strictly based off of this. Like it happens, but if we see it happen, we're not looking strictly to enter just off of that. We're looking for other confluences. Like, has this trend just started, or has it been continuing? And if it has been, for how long? The longer the trend's been going, the less likely we are to see it play out. Looks really choppy on the 15-minute. One back test and you see it better. Okay, right here. Price break structure and just comes back right down to the area where it broke and then continues up. This is the start of the trend, so we have higher probability that it will play out. Things like that. Support and resistance zones, supply and demand zones for continuation. Simple stuff. As for our invalidation conditions or stop loss conditions, we want it below or above a liquidity sweep or below or above below or above confirmed structure. So that would be a breaker structure or a pullback into that zone we just looked at with where it broke the higher high or a lower low, or Fibonacci structure like that, like structure where we can be like confident in, where price has established confluence at, right? So TP conditions, we're looking at weak highs or weak lows, Fibonacci negative 61.8 or liquidity pools, and also session highs and lows. Highs / lows. So also where we're looking for our TP to get to, right? So that's basically that for trading wise. We also were able to, in the earlier phases of this video, we were able to look at backtesting, and we were able to backtest in the markets and see all of these conditions be met and how they would look like. So we already know how they look like. So words of wisdom. What would I want to know if I was just starting to trade, right? So a no trading day is better than a forced trading day. Seeing a no trade is okay. There are days when you're going to see no trade. Right. You're going to see no trade. It's going to look choppy. You don't have to trade. There's going to be other days. Right? Time's going to pass the same way. Time isn't going to stop on that day that's choppy. There's going to be another day, bro. Also, only trade A+ setups. That's going to give you the highest probability of winning, right? If you're able to be confident in your A+ setups, you could risk more, right, than risking less on low probability setups, but you're taking more low probability setups than the A+ setups, because let's be fair, let's be honest, the A+ setups aren't going to show up that often, right? They're not supposed to. They're A+ setups. They're what we need to see. They're not going to show up very often, but they'll show up. And when we show up, we got to take advantage. 1 month of A+ setups is exponentially better than 1 month of C setups. The month will still pass. Time will still pass. You're not going to be stuck in that rangy day forever. There's going to be more days where you can trade. There's going to be better days. There's a light at the end of the tunnel. Like, relax. If you don't get a trade off today, it's cool. There's going to be tomorrow. If there's no trade tomorrow, it's cool. There'll be the next day. You don't need to force a trade. No trading day is better. A no trading day is better than a forced trading day. All right. So 1 month of A+ setups where you trade like half the days compared to 1 month of C setups where you trade every single day but constantly losing, then you're winning, then you're losing. Like, no. If the trade doesn't scream to take it, it's better to not take it. A missed trade is better than a trade FOMO'd into. So if I see a trade, and we see that with backtesting in the previous video, where there were some trades where I just wasn't extremely confident in, so I didn't enter. They worked out, but I just wasn't too confident in it. If I'm not confident in the trade, then I'm not entering. But there is a difference in being confident and being scared. Some trades I would be confident in, but I was too scared to enter because I was scared that I would get stopped out. So I need to be, 1, confident, and 2, not be scared to take the trade, which is also confidence. But yeah, Next, do not over leverage. If losing this trade will make you stress, lower the risk, even though there's more money to be made. There will always be another day, another trade. If I'm risking too much, I'm going to be looking at the trade, my invalidation point, I'm not going to trust in, TP, I'm going to move. If I'm risking too much, I'm not going to be trading as optimal as possible, right? You want to trade in an optimal sense. You do not want to risk too much, right? Your goal is not to make money at all, it's to survive. What do we see with a lot of prop firm traders? Their goal is to make money, so they're not focused on surviving. Your goal in trading is to survive. Your goal is to last with the account. Your goal is to just get another day. Trade to see another day. Don't trade to win and have a home run day. Trade to just see tomorrow. Trade to build the account for next month. Trade to survive. Stop trading to make so much money. Like, the money doesn't matter that much. You're gonna get money regardless. If you trade to survive, your pockets will get full. Like, just relax. Your pockets will get full. You don't need the money right now. And if you do, then trading's not what you need. You need a job. If you need the money that desperately, do not turn to trading. Because trading will take time, and your goal with trading shouldn't have in the back of your mind, dang, I need to make money today. No, you don't need to make money today. You need to survive today. You need to survive in a market full of sharks. We're not moving the markets at all. We're trading what people want to be traded. Do not overexpose yourself to trading. If you get a good win, it's okay to leave the session. If you get a good win, you're confident in, you don't have to continue trading. You're good for the day, right? That's way better than continuing to trade, and then you lose everything you made, and now you're regretting your whole life decisions up until that point. However, if you see another A plus setup ready to be taken, size down and take that trade. You're good. You could take that trade if you see your A plus setup being taken. If you see a sweep and then you're like, dang, I see a sweep and I'm expecting another sweep liquidity to continue up, bro, you could set an alert. You can lower your lot size or lower your risk, and you could take that trade. It's cool. Win rate only matters if you keep a consistent risk management system. There will be times where you will see people with a 70% win rate and they will do worse than someone with a 50 or 40 or 30% win rate. I have a 30% win rate. But my losses are minuscule compared to my wins. My wins are large, and a lot of my losses are due to me being, as I said, incompetent. Like, I'm looking at the markets and I'm just not. I'm willingly trading what I do not trade. That's what most of my losses are. There's some losses where I just lose due to the markets. I'm completely fine with that because I know that I'm going to lose. I have to lose. My strategy has to be invalidated at some point. So I know that, hey, okay, this didn't work, so let me be more patient. Now I know next time, hey, I'm not going to not trade, but I'm going to be aware that there's a chance that this can happen. There's always a chance you can lose. But win rate only matters if you have a consistent risk management system. If you're risking different lot sizes, I'm going to keep saying lot sizes even though I trade gold futures, but if you keep changing your contract size or your lot sizes after every single trade, depending on if you win or lose, your win rate doesn't matter because your profits are gonna fluctuate and your losses are definitely going to fluctuate. So it just doesn't make sense. Do not tell others you trade. Keep it to yourself. Telling others you trade is gonna do nothing but put pressure on you. Do not tell your mother, oh, Mom, I'm gonna buy us a house, bro. Relax. That's gonna put pressure on you. Of course, you could update people. Hey, yeah, I'm trading, but don't tell them. Yeah, I made this much money. Just tell them, no, I'm working on myself. You don't gotta tell them. You don't have to have everyone in your business. Like, yeah, you could post a trade or two. You feel me? But you don't gotta OD it. Give yourself some slack. Everyone loses, even if they don't show it. I'm talking about social media here. Everyone loses. everyone loses. Every single person loses. There's not a person with a 100% win rate who's on social media flaunting it and selling it to you. If they have an 100% win rate, what would you do? You would keep it to yourself and you would print. So why are they so different? Are they just some generous, humble person? I doubt it. I highly doubt it, because if they had that system, either they're gonna overcharge and go up to the hedge funds or the big banks to sell it to them. They're not gonna go to you on Instagram and sell it to you. What sense does that make for them to sell at 100% win rate, like 80% win rate? No, no strategy matters. No strategy is going to save you from yourself. No strategy is going to save you from yourself. No strategy. There's no strategy that can save you from it. My strategy does not work even with myself if I'm not in control of myself, if I'm not constantly having this hindsight bias, or I'm not constantly controlling my emotions and not allowing myself to FOMO into trade and keeping discipline, right? Take into account fundamentals always. Always, always, always know what announcements are coming out, because you will get absolutely fried. I'll show you an example with yesterday. No one would have expected this. I'm not gonna lie, I didn't even expect this. I was looking at the data for yesterday's announcement, or Monday's announcement. It's Friday's announcement. Oh my gosh, where was it? The 21st. I want you to take a look at this. All the data was good. I was in bias. I was looking for price to go up. All the data was good. All of it. All of it was good. As in good for, hold on. We need to change this filter for high news only. All of it was good, as in good for gold. The US was going down, right? Yeah, some of this stuff went up, but the US overall was going down. This right here shook everything. The consensus was negative 3.7%. The previous one was negative 8.8%. We went up around 20%. This was phenomenal for the US, right? It wicked down from 5073 to, I think 700 pips. Crazy. If you don't have, and if you're not in tune with fundamentals, you're gonna think, gold seeking my stop loss. Bro, be in tune with the fundamentals. Know what's happening, right? Just know what's happening with price. Just know, and then you can see price even get tapped down into this zone right here, and then like, bro, sweeping all this, like, just be in tune with fundamentals. Know that even though price is pushing down, is pushing up, there's a chance price could do that. There's a chance. There's always a chance. I would have never expected price to, or data to have increased 19%. Come on. If we look at the data, I doubt it's increased like to 19%, like that many times. Like it's happened like one other time or something. Probably more times, but like this is something I would have never expected. If it was normal, it would have been great for gold. But keep fundamentals into account. Next, get off of social media. This is the last one. Get off of social media. It's all fake. No one is a perfect trader. They're selling you something, right? Do not envy their wins that they show, because there are losses that they hide. It's all fake. Again, stop comparing yourself. Don't covet over someone's Lamborghini or something like that. You don't need that. There's so much more to life than just money. Like, if you're worried about that, then your priorities are kind of messed up. You don't, money doesn't really matter that much at the end of the day. Focus on something you that has value, right? Money has value, but
What intrinsic value does it have? Can't make you happy that much. Like, yeah, it could bring temporary happiness. Yeah. But at the end of the day, money can go away. Focus on things that don't. All right. Now, each and every training problem that I face. Problem, I struggle to accept when my trade is invalidated. Solution, answer on high conviction trades. If I am entering on a trade I'm not confident in, it's normal for me to not trust it. Facts. Problem, I don't like waiting for price to either hit TP or stop loss. Solution, enter on A plus setups and leave price to hit TP or stop loss. Either price validates or invalidates your trade. Those are the only two scenarios that should happen, right? Depending on your system, but for me, this is the only thing I want to see happen. Problem, I don't fully trust my invalidation levels. Solution, stop rushing into trades and forcing yourself to have your stop loss at a weak area. Wait for a confluence, then a confirmation followed by structure to enter off of. Be patient. Be patient and enter off of high conviction areas. Problem, I rush into trades instead of waiting for confirmation. Solution, be patient. Price will always pull back after pulling up or down. Do not rush into a trade, even if it's pumping like crazy. It's better to get a confident entry than a weak entry because of FOMO. Right. Problem, I focus too much on short-term results instead of long-term consistency. Big problem I have, especially with trading. Solution, focus on the goal ahead. Time will still pass the same. So use it in a fashion that if I look back in a month, I can be proud. Same with my relationship with Jesus Christ. Have your eyes set on the goal ahead, eternity. Don't focus on, short-term gratification results, short-term things. Focus on things that actually affect you long-term. Like these A plus setups, focusing on them long-term is actually beneficial for you, you know? Hold on. All right, so next one, when I lose a trade, I abandon my strategy and start flip-flopping. Solution, stop entering in bad trades. If an A plus setup gets taken out, so be it. But taking 3C trades will cause me to doubt my strategy. All right. Problem, I judge myself based on whether I lose or win or lose that day. Solution, focus on whether I took good trades and had good discipline. If I took no trade because I wasn't confident enough, that is a great day. Also, constantly journal my feelings, how I'm feeling about the day, and trades I took or didn't take. Problem, I'm overly obsessed with performing well in trading and other aspects of my life. Solution, focus on doing well and doing nothing. If I'm able to stare at the charts and not put in a trade despite price just pumping, that is a great trading session and that is good performance, right? It's better than me putting too many trades, which I think is what makes me a good trader because I'm overexposing myself. That's a problem I tend to have. I believe doing well in trading will fix my life and fix my life for my problems. So trading doesn't care about your life, your problems, your emotions, nothing. So stop attaching them to it. The solution, detach from life problems. The charts don't care about any life problems, so don't bring them to the table. Problem, I sometimes lose trust in my strategy after a few losses. Solution, focus on A plus setups and do not lose trust in the strategy because it works. Problem, I spiral and start gambling on NQ or silver instead of sticking to gold. Solution, just don't. You're better off not trading than gambling. You're better off not trading on gold than gambling on NQ or silver. Problem, I convince myself I don't trade enough and force trades, especially during Asia, which leads to chop. Solution, one good trade is better than 5 bad ones. Right. Problem, I haven't backtested Asia session enough to have real confidence in it. Solution, stick to New York session. Don't overexpose yourself. All right. So, I mean, it's simple stuff, man. Stick to this. Stick to your strategy. Stick to your trading plan, and you will be profitable. This goes different for everyone depending on your trading strategy. However you trade, stick to it, and you'll see a great improvement in your trading.
right? Even if you don't win every trade. So that's basically it. Yeah. We'll continue back testing pretty soon. And I think, let me see. Go to chart. I think it just said we had 30 days left. It's the 22nd, so we should be on the 22nd of January. Yeah, we're on the 22nd of January, so we have about a month left. We back tested around 22 days or so. Not bad, man. Not bad. But yeah, so let's see how we continue doing, and I'm just gonna keep rewatching this until I drill into my head, honestly.